The government was really just a referee on the field between two different teams. And today, and this really started in the financial crisis 10, 11 years ago now, but it's even more true today where the government is actually a player on the field. It's almost, think about it as a third team that is interfering in how our games are normally played.
From Smart Business Network, I'm Dustin Klein, and this is a special episode of the Smart Business Dealmakers podcast on managing through uncertainty, a business owner's guide to navigating the unprecedented disruption caused by the coronavirus. Our guest is Omar Qureshi, Managing Director, Partner, and an Investment Strategist at Hightower, St. Louis. Omar, thanks for joining us today.
Good morning, Dustin. Great to be here.
Thanks. So, Omar, what trends are you seeing in the marketplace right now when it comes to wealth planning solutions in light of this recent COVID-19 crisis and what the future brings?
Yeah, Dustin, that's a great question. I think this is a time of unprecedented uncertainty, and we, historically use that word unprecedented all the time, but I think this time is actually truly without precedent, not only with the, uncertainties around COVID itself, but of businesses and the changes in government policies, tax policies, a lot of the government programs. So I think clients are looking for some clarity, for some comfort, and some guidance of how to navigate this incredibly uncertain time. I think there's a focus on basically what are the strategies to get people through this period of time to the other side. And I think that kind of is consistent with the government's response, that they're effectively trying to create a bridge, economically speaking, between, where we live today and hopefully where we live when this, virus is contained or there's more effective treatments, et cetera.
Do you think that, how that differs from pre-March 1st as more psychological, or is it more structural?
Well, it's definitely both in my mind. When you look at the landscape for families and business owners prior to COVID, I think largely on the back of government deregulation, more friendly tax policies to both individuals and families, we really had been seeing an economic reacceleration coming into this year. And from our perspective, from a lot of our clients and business owners, they were tracking to the best years, the best quarters, in terms of revenue, in terms of, even market performance that they had seen, ever. And so I think there was a lot of confidence coming into this year about the direction of the economy. Unemployment was at all-time lows. Interest rates were at all-time lows. Money was ample to either borrow, to invest, or to buy businesses, et cetera. And then all that came, ground to a halt when the economies, globally locked down around the March timeframe. And so, that kind of dramatic fall off, which is something that we've never seen, and it sort of dwarfed the speed that we saw even during the financial crisis in many respects. That's going to take a toll on just the human psyche, right? And people pull back in uncertain times. So that's always going to be a component when you see the kind of stuff that we saw, particularly in the public markets back in March and April. But, to your other question about is this sort of a sea change or is it just emotional? I think, from our perspective, so many of the trends that were prevalent prior to COVID this year, are the ones that are still in place, and they're simply just getting exacerbated or accelerated because of COVID. So the move to virtualization and, online, activities, or just making, business processes more technologically efficient. This has just really accelerated the need for a lot of those things to happen. And it also has accelerated the demise of certain types of, business models and industries. But those things, frankly, were already happening before. This just serves to kind of reinforce a lot of those things that were going on. So I think there is a true impact going forward that's going to cause people to rethink or maybe just need to think quicker about those trends that are going on. But at the end of the day, I would caution people to say, mankind is going to look completely different in perpetuity from here. We're all creatures of habit, and in most cases, the more things change, the more they stay the same. So, we like to encourage people not to get too caught up in the here and now and extrapolate that forever. There are obviously permanent changes that will come out of this, but our way of life isn't going to be radically altered coming out of this on the other side, whenever that might be.
And that makes a lot of sense, Omar. So looking forward, what kind of impact do you think that recent government activities, and you mentioned a few of them, such as PPP, things such as funding zombie companies and various rule changes that have happened prior to COVID, then during COVID, do you think those are going to have on business owners moving forward as we look at 2021 and beyond?
Yeah. No, it's a great question. And Congress obviously, was very, very quick to act at the end of March in passing the CARES Act, which contained the PPP as well as a host of other things. And again, it was an attempt, and I think they would explicitly say this, to basically preserve employment for a fixed period of time, hoping that if they could get businesses and small businesses through this period of time, that maybe, the employment rules could be contained and that the world would look better after those periods were up. I think, while we probably don't disagree with the things that were done and the fact that those things were really necessary economically speaking, anytime you have the government getting involved in businesses to the degree that they have, and I would extend that, to the actions of the Federal Reserve in the United States, and it's not exclusive to the U.S. either. But, there's a lot of programs the Federal Reserve came out with at the end of March, which really provided the backstop to the markets, frankly, because they offered to be the buyer of last resort for so many things. But, the Fed is actively buying bonds of corporate America, both investment grade companies. The Fed is now major holders of some of the broad-based corporate bond exchange traded funds in the market. They're also buying bonds directly. And so you see them investing in companies like Apple or Microsoft and things like that, where, arguably does Apple or a Microsoft actually need the Federal Reserve to be buying their securities? But then they're also buying companies that have been downgraded investment grade status to junk status. And that, in my mind, creates an enormous moral hazard that they're effectively funding companies that may not be, going business concerns, but if they can get, funded indirectly or directly by the government, they can last for a really long time in spite of A, having a challenged business model, or B, maybe making, these companies have made poor capital allocation decisions historically. So I think, to kind of bring that all together, the government is more and more involved in the market. And I like to use the analogy that, historically, the government was really just a referee on the field between two different teams. And today, and this really started in the financial crisis 10, 11 years ago now, but it's even more true today, where the government is actually a player on the field. It's almost, think about it as a third team that is interfering in how our games are normally played. And I think from a capitalistic sense, again, pure capitalist would sort of have issues with that the government's going to play a bigger and bigger stake, which may affect, business owners to the extent that the government wants to have a much larger say in the activities or in the profits or what's, acceptable in terms of profits and things like that. So I think that's one of the worrisome trends that I foresee over the next several years, is just the increased role of the government. And by the way, as we kind of think about all of the money that the government's thrown at these problems, which, again, we can't argue that they weren't needed. You've got to imagine that the increased debt load that we have as a country and the world has, will come at the expense of long-term economic growth. I think it's a fallacy to think that we can just print money on an unlimited basis, or we can borrow money as a country and as companies on an unlimited basis, and somehow, that's just going to keep generating profitability or excess growth in the markets. I think that doesn't make any sense in my mind.
But Omar, from that perspective, what do you see potentially as the longer term implications of that as it relates to, business owners and families who are trying to build and preserve their wealth?
Yeah. Well, I think, and to segue kind of in the next potentially, market moving event. We've got the election coming up, obviously, at the end of the year, or we're supposed to have an election anyway coming up. And, we've enjoyed as individuals, as business owners, and as an economy, record low tax rates on an individual basis, on a corporate tax basis, on a capital gains basis. And so I think going forward, the most obvious implication is, and the worry, frankly, is that tax policy and regulations on businesses might start going the other way from what we've seen. And so that's going to have an immediate impact on the way businesses operate and in terms of the regulation as well as the taxation. And I think there's also, and this is, blends a little bit into kind of the social inequality issues that have come to the forefront more so lately, that I think there's a growing chorus that the system that we've enjoyed as individuals in terms of business owners, in terms of investors, et cetera, that those gains haven't been shared equally across the board with society. And, we've created a case of sort of the haves and the have-nots, which is obviously talked about in social terms, but really that's happening in economic terms as well. You can see in the stock market itself, you've got the sectors like technology and healthcare that have really benefited from, this whole COVID scenario. And you've got some of the, more traditional type of companies, the industrials, energy, travel, leisure type of companies going the complete opposite way. So as much as there's the haves and have-nots on a social basis, we're seeing that in financial markets as well. And so if as a country, or even as a world, we're going to try and bridge some of those things, I think there's going to be a greater movement towards more of a sharing or more of a restriction on just unlimited profits accruing to just a few people or a few companies in society. And so that's a different world than we've lived in really for the last 30 or 40 years.
And that certainly would be a sea change for people to get used to. Along those lines, what concerns are you hearing from your current clients who have their own concerns about the current situation and what it means for their own future in terms of their wealth?
Yeah. Well, naturally, again, going back to that theme of just the emotional response that people will have to the market turmoil and just the news cycle, people battle with uncertainty. And, there's a lot of questions about what do we do going forward to make sure that our assets are secure, that our businesses are, as insulated as possible. And I think those questions are becoming more and more difficult. You've seen as a function of explicit government policy, interest rates, basically round down to zero now. So as investors, people are kind of stuck between a rock and a hard place in that you've had the equity markets have a resurgence off of the March lows. And, anecdotally, I talk with clients and say, look, this is a market that went from something looking closer to the Great Depression back in March to something that looks closer to the tech bubble back in, the year 2000. And we did that in about an 8-week period. And so I think clients are concerned. They obviously want to make a rate of return that supports their objectives, their goals, et cetera, but they don't want to take a crazy amount of risk to achieve that. And with the return on most safe assets like treasuries, corporate bonds, and some places in the municipal bond world, those things are paying less than they ever have. And so, to earn the same kind of rate of return that one would expect historically, the basic reality is you have to take more risk today to get that same modest rate of return. And that's really a challenge for people to want to take on more risk in this kind of environment. And more so given the fact that the equity markets, at least domestically, are almost where they were to start the year before this whole impact came. So it's a real head scratcher for a lot of clients to understand that, the market, if you sort of just woke up or landed on Earth from an alien planet and looked at the stock market performance on a year-to-date basis, you'd say, doesn't seem like that much happened in the world. And then the reality is everything happened in the world. And I think that can be largely attributed, not exclusively, but largely attributed to the government intervention into the markets to help support things. So I think there's a growing concern that we hear from our clients, and that is this sustainable? Does this make any sense? What's going on in the equity markets or even the fixed income markets versus what we see out there in the real economy? So those are some of the challenges that, clients face on a go forward basis. And I think that's the challenge as investors, if we separate it from business owners, is, how do you earn a real rate of return? In other words, an inflation adjusted rate of return that's positive. And I think that's going to be the biggest challenge for clients moving forward into the next cycle.
No, I think you're right on that. Now, have there been some winners, do you think? I mean, are there more attractive or alternative options that have been created by this crisis for those kind of folks to think about, whether it is for creating new wealth or for preserving existing wealth?
Yeah, I think there's definitely, in any crisis, you obviously have destruction of some areas, and then you have the creation of new areas. And I think that's what makes the U.S. economy so resilient and robust, or at least to the extent it has been for the last couple hundred years, frankly, is that you never really want to bet against the ingenuity of the American economy and the American people. And so, that's one of the positive things that have come out of here, is that businesses in our country are incredibly fast to adapt to new realities. And this has been no exception. And this is probably, the best case that we've seen of it historically, is just how quickly businesses pivoted to be able to continue operating in this current environment. And frankly, that's a shift to a lot more technology of one sort or another, and I think back to Mark Andreessen, obviously a famous tech inventor and investor, who said, I think it was 9 years ago now, that every company is a software company. And if you don't understand that dynamic, you're going to be in trouble. And it doesn't mean you have to create and write software and sell software. It just means that all business processes can be augmented, if not replaced, by some kind of technological solution. And that doesn't mean we're going to be all replaced by robots. It just means that technology will enable us to do better. So there has been, and this was true before COVID and is true going forward, the technological innovation space, has been incredibly disruptive. And those are incredible opportunities as well, not only for business owners to implement these kinds of things to help improve productivity or efficiency or expand into new areas, but also as investors, there's a lot of great growth stories of companies that are making a tremendous impact on people's lives in the world. So definitely opportunities around there, around growth. I think healthcare is another area that is and will be transformed going forward as COVID forces us to rethink the way we approach healthcare in this country on a go forward basis. So we're seeing some opportunities there as well.
Omar, before we wrap up, I want to ask you on one more subject, and that really is the idea of wealth transfer to relatives, whether it's a family business or a trust. Is now a good time to consider wealth transfer? And if not, why?
Yeah, no, I think I would say there's really two prevailing items going on here today that would encourage people to do that. So number one, this is the most generous estate and gift tax law regime that we've ever had, maybe with the exception of the year that the estate tax was repealed. I think that was back in 2012. So as a individual, you can leave or gift close to about $12.5 million today. So if you're a married couple filing jointly, you double that amount. So you can pass an extraordinary amount of wealth to different sorts of trust or to family members, et cetera, today, free of estate and gift tax. Combine that with the fact that depending on the type of, if you're a business owner, depending on the nature of your business, you may have, an impaired business valuation as well because of the things that have happened. So, to the extent that you can take advantage of the current estate tax regime with a lower business valuation, that makes a ton of sense. And the reality is that the current tax code is scheduled to sunset in 2026. If not sooner. They say the cuts are quote unquote permanent until 2026, but we know that nothing in Washington is permanent. So it may be a case of a use it or lose it or type of situation going forward. The other part is that interest rates are, at rock bottom. So strategies on the estate planning world that utilize, the applicable federal rates for, rates on loans and things like that are as low as I've ever seen them anyway. So that's another factor that goes into this. So I think those kinds of strategies are super effective in this world today. And of course, it's not a panacea for everybody. There are lots of issues around that and potentially loss of control and things like that where people may not be ready to go full blow. But there's lots of creative strategies to kind of assist with that. So we're talking to clients a lot about that in this current environment. And I think that's really a powerful point from my perspective, is that as much as we focus on the markets or the news cycle and things like that, there's always different types of strategies, whether they be tax strategies, estate planning strategies, gifting strategies, or even just, taking this opportunity, if you're a business owner, to work with somebody to get some valuation work done, to have somebody who has experience look at the state of your business and say, what are the things that you could be doing to help, maximize the future growth of your business? And that's whether you're interested in selling a business or not. I think we can all agree that, getting your business in tip-top shape is a good idea, either for yourself or to set it up for a sale down the road, or even for your family down the road. Those kinds of things I think are always good ideas. And this is a great time, when you go through crises like this, it's always a great time to make sure all of your strategies, both as individual families and as business owners, are really in tip-top shape given the uncertainty. And frankly, because we're in a healthcare crisis, people need to make sure that their documents are in order from a personal basis, from a business case basis, because you never know what's going to happen. And that's always true, but it seems to be more true today. So you want to just make sure you're as protected as can be against the various outcomes that we might see.
Well, Omar, that is a lot to think about, and I really appreciate you sharing your thoughts and insight today with us. Thank you for joining us.
Thank you, Dustin. Very much appreciated being here today.
If you like what you heard on the Smart Business Dealmakers podcast, please share it with your colleagues and subscribe to receive future episodes. You can also visit smartbusinessdealmakers.com for more insights from the entrepreneurs, investors, and advisors driving M&A across the country.